Hello everyone, welcome back to this channel. Today we are going to talk about a very important item, that is accounting equation. Accounting equation. Science has so many equations. Mathematics also have so many equations. So today we are going to dig deep into accounting equation. Please stay tuned as I give you the details of it. Thank you. So accounting equation. It states that a company's total assets are equal to its liabilities and its shareholders' equity. And it shows the relationship between assets, liabilities, and equity. What is an asset? I've explained assets in my earlier videos. Assets basically means resources that are controlled by an entity as a result of what? Past events, and then there will be a future economic benefit. We have two types of assets, that is non-current assets and current assets. Non-current assets basically means assets that cannot be converted into cash within a short period of time. Two types of non-current assets are tangible assets and then what? Intangible assets. Tangible assets are basically assets that can be seen, felt, and touched. Examples are buildings, motor vehicle, fixtures, and fittings. The intangible assets are assets that we cannot see, we cannot feel, we cannot touch, but it is there it is a resource in the organization. An example is patent, copyright, brands. So the current assets, what are they? Current assets examples are inventory, cash, receivables, and bank. Liabilities. What are liabilities? Liabilities are the obligations an entity owes to other parties, as I explained in my other video. And then equity is the what? The contribution of the shareholders or the contribution of the owners of the entity. So liabilities, we have current liability and the non-current liability. The current liabilities can be creditors and then others. The non-current liability can be loans, debenture, etc. So let's explain further. Assuming a business is set up and it was the owner who supplied all the resources. So what will it be? The resources supplied is called owner's equity, while the resource in the business is called assets. We just explained that equity is what? When owners contribute their own capital. And the owner is setting up a business, he has brought a capital. So it's called owner's equity. And that money or that capital, that money he has contributed is what will be used to purchase the assets. So now the accounting equation will be capital or equity is equal to assets. They will all be at par. They will all be equal. I hope you are getting it. So let's explain with examples so that you will get it more. So Super Wonder started to operate a transport business by purchasing a motor vehicle costing 40,000. He used his money to purchase the motor vehicle. So the money he used is what? Equity. And then the motor vehicle he purchased will be called asset. That is an example of an asset. So the equity will be the money, his own money he brought, and then the one he purchased is what? Asset. So the accounting equation will now be the capital of 40,000 will be equal to the asset of 40,000. That is the motor vehicle. So in some cases, other people other than the owners of the business also supply resources to the business. If others supply resources to the business, it's called what? Liabilities. An example is you went to a bank and then the bank gave you a loan to add up to your capital to run your business. So that money they gave you is called liability. So it will now be the equation now will be asset is equal to capital plus liabilities because a loan has been added. I hope you are getting it. So we will quickly look at examples that are related to this one, the liability is introduced. Assuming Super Wonder contracted a loan of 10,000 from the bank, which she opened a bank account. So she contracted a loan to be added to her capital so that it will be used to run the organization or it will be used to purchase the assets. So how will now the accounting equation be? It will be the capital of the 40,000 plus the liability of the 10,000, the one he just went for from the loan from the bank. It will be equal to assets. The asset will now be motor vehicle and then the bank account, because she opened a bank account and placed the money there. So there will be a cash in the bank for you. It will also be the asset. So it will be 40,000 plus the 10,000 in the bank. So in summary, the relationship between the assets, liabilities, and the capital could be expressed in the following way. The basic one we know is what? Asset is equal to capital plus liability. So let's explain. Now we will use a change of subject here. We are coming to do math here. So please watch here. So asset is equal to what? Capital plus liabilities. So when we want to find capital, what do? We will now do change of subject. So this is capital. So the capital will now stand alone and the liabilities will be here. So liabilities will now cross the equal sign. If it crosses the equal sign, then it becomes negative. Then it will be assets minus liabilities is equal to what? Capital. So that is the second one. Assets minus liability is equal to capital. So now liabilities, how do we find it? So liabilities will now be assets minus capital, because capital will also cross to the other side to become negative. So it will be assets minus capital is equal to liabilities. So let's explain with how business transactions will affect these accounting equations we've spoken about. So what is a business transaction? A business transaction is what? A transaction engaged by the firm, which can be quantified in monetary terms. A transaction engaged by the firm and it can be quantified in monetary terms. So the following transaction relates to super, a sole trader for the month of January, a sole trader. This is the transaction she did for the period. So on the first, she started a business with 3,000 Ghana cedis cash. He brought money into the business, cash into the business. So how do you record that? We will look at that. Contracted a loan of 1,000 Ghana cedis and then opened a bank account. On the 6th, she bought goods worth 2,000 on credit from Wanda. On the 20th, she purchased an item or an inventory in cash. So that's the cash purchases, 150 cedis. On the 28th, she paid Wanda 200 Ghana cedis cash. Paid Wanda 200 Ghana cedis cash. So let's look at how it will be treated, or how it will affect the accounting equation we have spoken about now. So 1st January, she started business with 3,000 cash. So which size will increase and which size will decrease? She started the business and then she brought her own capital. So it means her own money. So it means capital will basically or will automatically increase. And then she brought in cash. And cash is an example of an asset. So asset will also what? Increase. So increase in capital and then increase in assets, that is in cash. So on the 5th to loan of 1,000 Ghana cedis given to Super Wonder, which she opened a bank account. Yes, she went for a loan, and when you go for a loan, it will become an obligation to you. That is a liability. And then she opened a bank account, and the bank account is also an asset, and she placed the money there. So your bank account value or the figure will increase, and then your liability or the amount you owe to other parties will also increase. So that is why we have increase in liability here and increase in assets. Bought goods on credit from Wanda, 2,200 Ghana cedis. And I told you that creditors are short-term liabilities. So she bought the goods on credit from Wanda. The goods she bought, it is coming into the business as an inventory. So if it is an inventory in the business, it will increase what? The available inventory. So there will be more inventory now. And now her liability will also increase because she will be owing someone. She will have an obligation to pay back in the future. So that is why we have increased liability here and then increased assets. So on the 20th too, she purchased an inventory or a raw material and then she used cash to purchase. So it means that cash will move out of the business, which will reduce our assets, and also purchase the inventory or the raw material will come into the business, which will increase our raw materials we have. That's why we have increase in assets. They are all assets. Increase in assets, that is the inventory, and then decrease in assets, that is the cash. So finally, she bought on the 28th, she paid what? Wanda, the creditor, the 200 cedis cash. The goods she bought, she paid back. So how will you record that? She is taking cash out of the business to pay. So it will what? Decrease cash. The asset will decrease. And then Wanda is her creditor. And then if you are paying your creditor, it will reduce your what? Your liabilities you are owing. So if your liabilities are reduced, what will happen is that so there will be a decrease in liability, that is creditors, and then a decrease in assets, that is your cash will also decrease. So that will be all for today. Today we learned about accounting equation, and then we said assets should be equal to your capital and then your liability. I hope you learned a lot today, and thank you very much for your audience. Please be sure to subscribe if you are new to this channel. Comment in the comment section for me to know more. Give me a thumbs up if you like the video. Thank you very much, and then have a blissful day. God richly bless you.